ready for the second part of the GASB financial reporting model reexamination project. We held a webinar yesterday and we discussed the governmental funds, the proposed measurement focus and basis of accounting changes from what we are anticipating, what we're using now, and the proposed changes to the governmental fund statements, which may look a little bit different than what we use now. And we went through a bunch of potential journal entries and how they compare to what we use now. Again, all just focusing on the governmental fund statements. So there's another part of the preliminary views document, which we're going to go through today. And today is mainly focused on the proprietary fund activity, which also goes and talks about, obviously proprietary funds have to do with special purpose entities. And we'll go through a bunch of that stuff throughout the course of the hour. Again, my name's Eric Berman. I'm a partner with Eide Bailey. There's my phone number and email. I am also on the task force creating these improvements to the financial reporting model. We've been working for about the past 3 years, if not a little bit more, to get to where we're going, and we have a little bit further to go. And we'll talk about these topics for the remainder of the hour. Again, a main focus is going to be the presentation of the proprietary funds, and there is a slight change being proposed on operating and non-operating revenues and expenses. We're also going to be talking about, in my mind, my own personal opinion, a good thing, which is getting a little bit more consistency in budgetary comparison presentations. Right now, there is a bunch of choices that you can make, actually 2 choices you can make, but most of us use one versus the other, and so GASB is going to solidify a few things. At least that's their preliminary view. And we're also going to talk about 2 other issues which many presentations I've watched on this, they seem to gloss over, but they may be important to you. And as I discussed yesterday, this is one of the few due process documents that GASB has released in recent memory that happens to have an alternative view. And we'll talk about what an alternative view is when we get there a little bit later in the hour. And then finally, we'll wrap up in how you want to, and if you want to comment to GASB, how you can do that. And there's a number of different ways you can do that. And then we'll hopefully have some time for your questions. So if you missed it yesterday, so right at the end of December, the preliminary reviews document, which is what we're talking about today, was released. And coming up in less than 18 months is going to be the exposure draft. And as I like to say, is that our best and final answer? Well, it might be. And the exposure draft will include pretty much everything that comes forth on redeliberations, plus a number of other things that I think you're going to be interested in, and we'll talk about that when we wrap up the hour, assuming we have a little bit of time. But you may be interested in some stuff that is going to go in there, and the GASB board has already started to deliberate those topics. And then tentatively, at least according to the current plan, the first inclination of when we might have a final statement is sometime during March of 2022. Now, does that mean, as I mentioned yesterday, does that mean you have to go run for the exits and head for retirement? as of 2022. Probably not. My gut says to me, and we haven't discussed this yet as a task force, but my gut says to me that the implementation will be pretty much like GASB 34 was. For those of us who've been around for about 20 years, we remember implementing the current financial reporting model, of which I was also part of that task force. And there was a staggered implementation based on budget size. And the budget size was measured back in 1999. And it was a staggered implementation over 3 years. And actually, if you had infrastructure, there was additional periods stretching out potentially as much as 6 years to implement infrastructure. So, to the business at hand. Again, this first part is on the presentation of proprietary fund statements, including the operating versus non-operating measures. So current presentation is primarily contained in GASB 34. And for those of you who use the codification, and I encourage you to do so, it's codification section P80. And throughout P80, it has the format and content of proprietary fund statements. And also, for those of you who prepare financial statements, as we know, proprietary fund statements includes both enterprise funds and internal service funds. And from the looks of what is in the preliminary views, at the very least, the statement of fund net position for both the enterprise funds and the internal service funds will probably not change. For those of you who really enjoy, and I put that in air quotes, everybody can use air quotes on that, really enjoy preparing a statement of cash flows, it's not going away. And in fact, it hasn't been deliberated at all, and nor is it going to revert back to the indirect method, which some of us have used in our past lives, perhaps in not-for-profits or for-profits. We use the indirect method of the statement of cash flows. Well, in government, we use the direct method. And some of us really enjoy preparing that. But from what we can tell, it looks like the statement of cash flows will likely not change. What is the first big issue in the preliminary views document related to proprietary funds and internal service funds has to do with a change in the definition of operating versus non-operating revenues and expenses. And why is that important? Well, current GAAP allows a government to prepare a definition of operating revenues and non-operating revenues consistent with its own policies and procedures. And that gap has been in place since the issuance of GASB 9 back in the early 1990s. Well, in that definition really did not change since the 1990s at all. And what you have in current GAAP is a mishmash of similar types of organizations using slightly different GAAP for the definition of operating versus non-operating. In your mind's eye, you can imagine what it might look like. For example, a financing entity looks totally different than a transit authority and probably has different looking financial statements and different elements in the financial statements than a transit authority. A state lottery that uses a proprietary fund or is a special purpose entity is different than a public college and university. Again, different focuses, different methodologies, but they're both in proprietary activities or business type activities. So the goal of the GASB was to try to get some consistency. And when you get a group like the task force together with dozens of folks with all different opinions on it from all different aspects, including users, preparers, auditors. You get all different opinions, especially since we all deal with different entities. There are tribal nations that, for example, use proprietary funds. There are gaming entities that use proprietary funds. Colleges and universities, I mentioned. Transit authorities, I mentioned. Public utilities, all of which use proprietary activities, all of which may as well be component units that are discretely presented or blended and are special purpose entities. So the GASB said, okay, let's try to put these entities in buckets, and let's just try to see how similar or how different they are. And so there are 4 different approaches that they considered. The first being this self-sustaining or subsidized approach. And what does that mean? And I put it up an example here, which is extremely common. For those of you who ride public transportation, there's a rule in the Federal Department of Transportation which says that the fare box revenue of a bus or a subway or a streetcar trolley, whatever you call it, commuter rail, the fares have to cover a minimum of 20 cents out of every dollar of operating revenues. And the remaining 80 cents out of every dollar comes from some form of federal or state or local funds. But as long as that 20% is met, they're meeting the goals of the federal grant. Well, the other 80%, in essence, is a subsidy. And to some extent that works, other extent that really doesn't work. Another way that the GASB envisioned was perhaps something related to financial performance. And this happens in higher education a lot, where there is a transfer that comes in from, say, a college foundation or some other form of endowment to fund operations. And this happens also in healthcare facilities, for example, that happen to have endowments, where a minimum amount that comes in on an annual basis to essentially equalize out performance to what is measured in the budget. The third way that they thought of was, gee, is there some form of these one-time transactions to fund operations? And this occurs in many general purpose governments that have to essentially move funds over to a proprietary fund to fund certain operations. For example, I know of airports that need to do capital improvements, and these are typically small airports, and there's a loan that comes over from the general fund, an internal loan, and the advance is repaid over a period of years to fund, say, an extension on an airport runway. Well, that's a non-recurring transaction that goes to subsidize, say, capital improvements at a proprietary fund. And then the fourth aspect, which is one that a lot of folks were pretty vocal about, is when an entity issues debt. And usually in the debt indenture, there are bond covenants that say, here is the definition of operating revenue versus non-operating revenue. And let's keep to that, whatever that definition says. Unfortunately, all 4 of those result in different definitions of operating versus non-operating. So the GASB said, let's try to get together. And there was a subgroup of us that got together, and of which I was on it, and we came up with that the best notion was to try to decide what was non-operating first, and then everything else by definition would be the anodyne of that. Everything else would be operating. So what are going to be non-operating revenues and expenses, at least in the GASB's preliminary view? Non-operating revenues are going to be subsidies received and provided, and these are typically from other governments. In fact, they should be from other governments. And we'll talk about subsidies in a little bit. Any sort of revenues and expenses related to financing. So we're talking about bond issuances and bond repayments. It could be some form of leases as well, but that's not quite delineated in the preliminary views. Perhaps as part of due process, they'll talk about things like leases. And of course, lease activities is beyond the scope of today's hour. Perhaps another webinar coming up in the future will talk about the changes, the massive changes that are coming in the future on GASB 87. The third aspect of non-operating is any sort of resources provided from the disposal of capital assets and inventory. So let's say you sell a building that is connected to a proprietary fund, and the proceeds are used to remain in the proprietary fund, or you happen to be a special purpose entity with just proprietary activities. If that's the case, you sell a building, well, that's going to be a non-operating revenue because one would think that doesn't happen on a day-to-day basis. And then any sort of investment income or expenses, and again, that's related to financing. Now, we'll talk about some of the pros and cons in that in a bit, but everything else would be operating revenues and operating expenses. So there's some pros and cons on that. And actually here, let me just go back a little bit. Let's go back one. So one thing that's not really addressed in the GASB's preliminary views is, gee, let's say you're a proprietary entity and you happen to be a financing entity. That's what you do. Let's say you're a statewide finance authority. If you're that sort of entity, you're likely a proprietary activity. And since you're a proprietary activity, well, what does that mean? Does that mean that all my operations are non-operating? I think that's something that we talked about. Unfortunately, it did not make it into the final version of the preliminary views. So I would hazard a guess, at least my own personal opinion, that some folks may end up commenting or asking for a clarification on that. The same thing with investment income and expenses. Now, granted, most external investment pools are fiduciary activities. They're not proprietary activities, but let's say somehow you do a lot of investment activity, buying and selling of investments, and they're required for your operations. If that's the case, then chances are there might be a question you might have for the GASB as to whether or not that truly is operating revenues in operating expenses. So boiled down, there may be a change in any form of your proprietary fund financial statements. So again, we're talking about your enterprise funds as well as your internal service funds. And as we said at the top of the hour, the statement of net position probably won't change. What will change then is the statement of revenues, expenses, and changes in fund net position. And there are certain carve-outs, at least in the preliminary views. So if you're a loan entity and you do make loans, and we're talking about state revolving fund loans or some other lending activity, chances are that would be defined as operating activities, but nothing else really was defined, at least in the preliminary view. So I'm sure they'll be asking for clarifications on that. Rental revenues from land, and this is for real estate entities, rental revenues, sales of inventory, that would also be operating. Now, what does that mean for housing entities? I'm not sure. And so the goal, though, is to try to get to something that's a little bit more consistent from entity to entity. So I mentioned the word subsidies, and for those of you who do have printed copies, you may want to flag or dog-ear this page because one of the things we wrestled with is that the word subsidy is undefined in GAAP. And you'd think after all these years of governments dealing with subsidies and recording subsidies either from a larger government or giving to another government, that the word subsidy would be defined. And unfortunately, we did a search, and sure enough, it was not defined. And so the board has a preliminary view that the word subsidies or subsidy would be defined as resources provided by another party or fund to keep rates lower than otherwise would be necessary to support the level of goods or services to be provided. So if you're an institution of higher education and you receive a state subsidy to assist in continuing education or some other subsidy in terms of state aid that comes in, if the state aid is not coming in, obviously your tuition, and if you happen to have dormitories, they would probably rise in terms of cost. Now, some of the institutions of higher education on the line, they may want to see that because then that may free them from public oversight, but depending on the law, of course. But in other instances, many institutions depend on that. And of course, institutions of healthcare, you probably are under the same provisions. And so the definition of subsidies, I think we'll probably have a bunch of comments on it as well. What will the proprietary fund statements look like with these changes? So if you take a look at the top of the page, let me see if this is there. All right, so if you take a look at the top of the page, I'm going to see if I can move my cursor here. The operating revenue section looks very similar to what we have today. The operating expenses section would be delineated either using natural or functional expenses. It's up to you how you want to present it. We'll get to an alternative in a little bit later on in the hour. And then there's this new title here, income or loss generated by operations. Here is non-capital subsidies, and this is for your operating subsidies. And if you see down here, it's appropriations, taxes, grants, and gifts. And then the bottom line is operating income or loss and non-capital subsidies. So that all these appropriations, perhaps coming from state aid and taxes, if you happen to have a taxing district, or grants and gifts, those are all in a separate section. And then the next section would be financing and investing activities, which looks a little bit like our separate sections for our statement of cash flows. And then our final section would be other items, which is capital contributions. And the reconciliation between the net position at the beginning of the year and the end of the year, that is still there. So for many of you, this might not be too tough to take. For others, this is a pretty big change, especially if you predicate your financial reporting based on some other model in a bond indenture or a law regulation or something similar. So with that, I'm going to hand it over to you, Amy, for our first polling question.
All right, our first polling question. Which of the following would likely be non-operating revenues or expenses? Revenues and expenses related to grants and contracts, water fee revenue, salaries, or loss from the sale of a building?
Okay, well, yeah, we're lost from a sale of a building. Indeed, that could be non-operating. Revenues from grants and contracts, probably not. And so the answer is definitely loss from sale of a building. The rest are probably operating. And again, we have a few miles to go on this one. It could change, but loss from a sale of a building is indeed proper, and because it's really not part of normal operations for most entities. If it is part of normal operations for your entity, you may have a question. I got a question a couple of weeks ago from an entity that's being created from a former naval base where I'm at, that is in the process of closing, and they're creating an industrial park there, which is going to be a government, and they talked about a sale of a piece of land. Would that be non-operating or operating? And I said, well, if that's your normal part of operations, then indeed it could be operating, but that's under current GAAP, not under proposed GAAP. So again, for right now, the loss from a sale of a building is indeed right. So that's it on the proprietary funds, although for some of us it may be controversial. The next piece is on presentation of budgetary comparisons. And under current GAAP, there is an alternative. Most of us, the vast majority of us preparers, prepare budgetary comparisons beginning, and we're talking about the beginning budget as approved by our legislative body, and ending budget as approved by our legislative body, if indeed there are some budgetary amendments during the year. And then we have an actual column and a variance. And the variance column is optional. It's not really required, although most of us actually do it. We put those as part of required supplementary information, but GASB 34 actually allows us to put them as basic financial statements. And oh, by the way, we're supposed to do it for every major fund that has a budget that's approved. And of course, that's a general fund. And for most of us, it's most governmental funds that have their own budgets. And again, there's a handful of us out there that utilize basic financial statements. And there's a different level of auditing that goes on when we see a budgetary statement as part of basic financial statements versus part of RSI. And that's why a lot of us really default out to RSI. Well, the GASB said, you know something, since most of us are going to default out to RSI, let's just make it everybody present as RSI. And that's what's in the preliminary views. Now, the one thing that they've added to budgetary comparisons, and this may give some folks some angst, is that budgetary comparisons would be required to present variances between final budget in actual amounts and then original budget in final budget amounts. So that could work in some cases, could not work in other cases. So for example, I'm in the Northeast as of right now, and we're about to get a snowstorm on Sunday. And in many cases, snow and ice budgets are usually under budgeted. And then they seek a budgetary amendment after the major part of the snow season is done. And the budgetary amendment pretty much aligns to what was spent, along with a little bit of a reserve for the next snow season. And many governments do those sort of things. And so that sort of analysis between an original budget and final budget amounts would have to be put in. And as I say in the lower left-hand corner, you know, a lot of our RSI these days happens to have note disclosure to RSI. Well, that didn't make it into the preliminary views as of right now, but a lot of people may ask about, gee, is this going to have to require some form of note disclosure analysis? And oh, by the way, if we have note disclosure analysis as part of RSI, isn't that really close to what we're putting in the management's discussion and analysis? Well, stay tuned. Coming up in a few minutes, we'll talk about the next phase of the project. So hopefully not too tough to take, for many governments on budgetary comparisons. What are the other issues that are here? in the preliminary reviews? Well, there are two major topics of discussion. The first having to deal with component units. And of course, we're talking about discretely presented component units. Blended component units it looks like there's not going to be a change that is in GAAP. They're all going to be reported similar to funds as we do today. So if you have a governmental blended component unit, it's going to be part of governmental funds. Business type activity or proprietary activity component unit that's blended, that would be part of proprietary funds, and fiduciary as well. And GASB 84 talks about fiduciary component units, and again, beyond the scope of today, but perhaps during another webinar coming up in the future. So today, there is an alternative that is available in GAAP, where some governments have chosen to present condensed financial information of discretely presented component units in the notes to financial statements. But I think most of the governments that I deal with have columns off to the right of the statement of net position and the statement of activities presenting discretely presented component units. But if it's not feasible to present major component unit financial statements in those separate columns, the GASB is going to propose that you can use combining statements for component units. And many of us already do combining statements for, especially if we have more than one or two component units, we present combining statements. And we have a column on our statement of net position and our statement of activities that just says discretely presented component units. And it works out great. And so for most of us, not too tough to take, at least on the presentation of major component units. One that could be interesting is a proposed presentation of a schedule of government-wide expenses by natural classification as a supplementary information schedule. Now, why did I underline supplementary information schedule? I did it because it would not be required supplementary information unless you prepare a CAFR. If you prepare a CAFR, supplementary information is already presented, except this particular schedule would now be presented from the GASB, and theoretically it could be RSI. This is an open question that's in the PV, in the preliminary reviews, but for right now it is SI. And since it's SI, it would go after your RSI should you decide to present it. But if you don't present a CAFR, you don't have any supplementary information today, and you would not be required to present it. So what does this look like? Well, it looks very much like what institutions of higher education present for the IPED system. And for those of you who are on the line from higher education, you've seen this before. And it may even look like a budgetary report that comes out of your computer system. When I was a preparer, the system that I had 20 years ago had a report that just looked exactly like this, and we called it an object class report that presented all my expenses, and I could do it on a monthly close basis. All of my expenses based on object classification, which was natural classification, and then all my programs going across the top. So if you look at, say, the second schedule, this is the way it would look. And so down the left-hand side, you have general administrative, you have maintenance and supplies, pension benefits, OPEB benefits, depreciation, interest, and other. And then across the top are all the programs of that particular government. And again, this would be for the government-wide statement of activities. So any program that you have in the statement of activity or any function you have in the statement of activity would be in this schedule. Am I a fan of it? My personal opinion, I happen to kind of like it. I think, though, for many preparers, this may be a little onerous. It really is up to what does your system already produce. So with that, Let's go to our second polling question.
All right, our second polling question here. Under the current GAAP, which of the following ways can budgetary information be reported for the general fund and each major special revenue fund that has a legally adopted budget?
So indeed, number 3 or C is right. It's reported as RSI unless a government reports, it elects to report as a basic financial statement, which in my tenure as a partner, and before that as a preparer, and before that as a partner, I've only seen 1 or 2 governments that have decided to do basic financial statements, and so it's pretty rare. But I'm sure there are some governments, and maybe 1 or 2 on the line, that happen to use budgetary information as a basic financial statement, and maybe it's because they want additional audit procedures on it. So number 3 or C is right. So I mentioned at the top of the hour that this particular statement has alternative views. And what is an alternative views? It means that at least 2 board members dissent on a particular aspect or a number of aspects that are in the preliminary views or any other GASB due process document. So there are at least 2 board members, I happen to know how many there are, but there are at least 2 board members that have dissented. And they mainly dissented with regard to what we discussed yesterday. They really didn't have a problem with the proprietary funds. They really didn't have a problem with the presentation of the natural expense schedule. They didn't have a problem with the presentation of the budgetary information. What they really had a problem was with the short-term financial resources focus. And the reason is that in the preliminary views document right now, the proposed model is very close to full accrual accounting. We're going out into the next reporting period, but for both assets and liabilities, but we're really, still picking and choosing a bunch of information that is not going to be in the governmental funds. And these particular board members said, well, wait a second. A lot of the information that would not be presented in the budgetary funds, especially with regard to pensions and OPEB, asset retirement obligations, to some extent pollution remediation, to some extent compensated absences and other aspects, we're already estimating those amounts. And since we're estimating those amounts, why can't we estimate a current portion of those amounts and put them in the governmental funds if they're expected to be paid out of the government funds? And so they have a little bit of a differing view. And they also have a second differing view with this concept of normally, because it still puts the onus on the government's management to describe what the word normally is in the terms of their operations. And so if it is normal for your operations to put some bills in the desk drawer and leave them be for a couple of years, and then you pull them out and they're all nice and dusty and you pay them, well, that's your normal course of business. And sure enough, your accrual period may go out for a couple of years. And so why not align to some other concept? And the concept that they said was, if you have a contract, you know when the bill is due to be paid. Usually it says it right on the bottom of the invoice. And the invoice says bills are due in 30 days or bill is due in 60 days, but you know what it is. And so why not do an aging schedule of payables? And that would get you to your concept of normally. And in fact, many of us, we actually cash flow our governments that way. We know when our bills are due and we figure out the cash flow that is needed to pay those bills. And that's how we do things. So the examples that we went through yesterday could differ some of those results. So for example, in a bond transaction, let's say the bonds are called right after the period end. Let's say you're a June 30 government or a December 31st government, and let's stick with December 31st, and then the bonds are called on, today is January 17th, they're called as of January 31st, and you have to repay those bonds back to the bondholders. Well, that would be a liability. And also an outflow in a governmental fund. However, let's say you called those bonds 11 months after period end. Well, if that's the case, there might be a liability that's there, but let's say there are some receivables that are also coming in to pay for those bonds. Well, since there's a liability there, shouldn't you also declare receivable for the taxes receivable to pay off the bonds that, instead of due on January 31st of 2019, would be due on November 30th of 2019? And you're going to have a bunch of tax revenue coming in that would equalize out your governmental fund financial statements. And so it's not a bad idea, in my own personal opinion. And I'm sure there's going to be some comments on it. And the one thing that I think most folks will focus on is this last bullet here, in the fact that if indeed we have more of a chance to accrue some revenue and more of a chance to accrue some liabilities that are going to be there, these board members are going to be asking for a government-wide statement of cash flows. Now, as a former preparer, I know that preparing a government-wide statement of cash flows would be onerous. I've done it before, especially in the case of fiscal crisis where you're trying to grow every dollar into $2. You do some daily cash flows, and I certainly had to do that before. But preparing a government-wide statement of cash flows for most modern software in many cases might not be that bad. I'm not saying it's plug and play, but in many cases it might not be that bad. So that's something you might want to have to consider. How do you comment to the GASB? Well, comments are due in less than a month. Do they accept comments after the due date? Yes, they do. Comments are in writing to the GASB, and there's the email address, by the way. For those of you who are unsure, the comment letters are public records, and they are posted on GASB's website unless they are filled with expletives or things like that, or some other problematic comments. And they have received those in the past, and those do not get published for good reason. So just be aware that those are indeed published. There are 3 public hearings during the first 2 weeks of March, and they're in 3 different locations around the country. We'll show you in a little bit. By the way, there'll be 2 hearings going on at once. One on this financial statements, on this preliminary reviews, and another on a related document, which is a concept statement, which is almost word for word on the short-term financial resources measurement focus, and that will be taking place at the same time. The locations are going to be in, again, 3 different locations. There is also going to be user forums, and this is not for auditors, not for preparers. This is for your decision makers and users, your bond analysts, taxpayer groups, private citizens to testify before the board. These will be in Chicago, right near O'Hare Airport, and in New York, right near LaGuardia Airport, but you can also testify online via conference call. Here are the locations and the dates. March 12th in Atlanta, and it's at the same location as the National Association of State Controllers Conference in Atlanta. A few days after that in Queens, New York, and that is right outside of LaGuardia Airport, and then Rosemont, Illinois, which is right outside of O'Hare, the week before. And again, they do have conference call ability. So heading into the home stretch here. For those of you who are smaller governments and you say, well, wait a second, this is a done deal. I don't have a chance to come, and I'm not going to be able to make it to Chicago. I'm busy, or New York or Atlanta, and I'm busy. I can't do a conference call. You do have a voice. There are GASB staff from local governments who started out in local governments who really listen to you. And certainly through us and Eide Bailey, the vast majority of our clients are in the state and local government arena are smaller governments. And so by all means, you can comment to us. And if you happen to have any sort of ideas, please give it to us. The governmental funds, it's not going to be that much of a change. The proprietary funds, doesn't look like that much of a change. There could have been a wholesale change, say, for our cousins in the not-for-profit arena. They're going through some wholesale changes right now as part of their financial reporting implementation. And so, this could have been a lot worse. And it's not as I mentioned yesterday, it's not a wholesale, let's explode the financial reporting model and start over. It could have very well been that. And certainly years ago when I started on this project, that's where I started. Let's blow it up and start over. Well, we didn't quite get there. And you know something? It's for good reason. And then the schedule of government expenses by natural classification. I've seen some QuickBooks models and some other models that already have this built in, where Kiva and a couple other software packages have these already built in. And so once they're programmed, it should be okay to prepare something like that. So if you do, get a little worried about it, take a step back and say, wait a second, not much of this is going to change a lot. So let's go to our next polling question, Amy.
All right, polling question number 3, true or false? User forums are geared towards user community rather than auditors or preparers. And here are the results.
Yeah, we made it easier for you. Yeah, indeed, it's geared towards auditors and preparers. And so, no, it's not geared towards auditors and preparers. I apologize on that. It's for the user community. Again, your decision makers and analysts and so on. I mentioned that we have another round coming up in about 18 months, and I'm already starting to see some documents. I got some this morning on it, and the first piece is on not a wholesale redo of the management's discussion and analysis, but some really good changes in my mind. And the most important in my mind is there in red in the center of your screen, clarifying the guidance for currently known facts, decisions, and conditions. Most of us, we throw in that, yeah, we passed the budget, or yeah, we issued some bonds and so on. Well, a lot of that is normal course of operations, and what we're supposed to do is any sort of changes that may happen in the government or any sort of new operations, new grants, things like that. That would be good stuff to put in the management's discussion and analysis. And some of us do and some of us don't. Other things that could be in the management's discussion and analysis is to clarify what should be in the financial statement analysis component, and especially if note disclosure regarding budgetary comparisons goes into the RSI, well, some of that budgetary analysis may move to the RSI and not be in the MD&A. Also, one of the things that kind of strikes me as kind of interesting is a lot of us still use the diagram of how the financial statements relate to each other. And I have to tell you, that diagram is at least 20 some odd years old. and it has the little boxes that say government-wide statements and fund statements and so on. And we've been just copying that over and over and over again over the last 20 years. And at some point, you just have to say enough already. So the question is whether or not that and many other boilerplate or fill in the blank stuff goes away. And in many other industries, the management's discussion and analysis is a very important document, especially in publicly traded entities. It's very important. And so hopefully this will turn out, and again, we're just starting on it. Hopefully this will turn out a little bit better than what we're doing now. Another piece is on debt service funds. The financial analyst community, especially your bond analysts, have been asking for years that debt service funds automatically be major because we're paying our debt service out of it. Whether or not that makes it or not, I have no idea. But it is being asked for. The third piece is on extraordinary and special items. Extraordinary items are being clarified by the FASB right now. Special items, the GASB is the only entity that, other than, actually, no, the only entity that has these things called special items. And sometimes we don't recognize that indeed they are special items. And so whether or not extraordinary items gets clarified, we'll have to see. And then everything else in the PV that we just discussed over the past couple of hours, yesterday and today, as well as some of the elements of the invitation to comment, are going to be added into the exposure draft. And then it's going to be released in June of 2020, and you'll have a number of months to comment on it. There'll be public hearings, and then we'll get to a final standard. So here's what it could be in the MD&A. One of the discussion items we have is, can we get to a place where the MD&A is easily readable and understandable by readers who may not have a detailed knowledge of accounting? Now, that's an interesting concept. Sort of, I called it, can my mom read the MD&A and understand what's going on in her government? And it may be, it may work. Another piece is to discuss the current year results in comparison with the prior year, but emphasize the current year and focus on the question of why. And this is something that, answering that question why is something that many preparers miss. And then, of course, focus on the primary government and discretely presented component units and avoid boilerplate. Focusing again on answering that question, why? This is where they may head. So with that, let's go to our final question.
All right, final question, pretty easy. Did you find this presentation helpful?
I was thinking last night about another session on this, and maybe when we get a little bit further in the process, maybe when I start to see some documentation coming out on the MD&A, maybe we can talk about some of the thoughts on there. So with that, Amy, do we have time? We have a few minutes, quick minutes, if there's any quick questions.
We do have 3 minutes, and if you guys do have any questions, you can use the questions box located on the right-hand side.
Well, if anything, I got a bunch of questions last night, and I thank you for that last night. And so if you do want to send some questions to me, there's my email address, there's my phone, and if you want to reach out at any time, by all means. So with that, Amy, let's wrap it.
Okay, sounds good. Well, thank you, Eric, for this presentation, and thank you all for attending. We will post this recording on our website, and we will send out the recording to all of you today. Just give us about 10 to 14 days to do so, and we hope everyone has a great day.